Greetings from HelpCoin again. We're going to go into a crazy combination of HBR, XRP, Polygon, and some ETF madness that's beginning to shake things up today. So grab your coffee and settle in. Let's start with HAR. Yes, I am aware that some of you will be upset with me for this, but at around 14, I made a move down. 5. Was that foolish now? We'll dissect it. However, let's discuss the market as a whole before we even discuss HAR. There is constant price action. The altcoin market as a whole is in the red, but XRP is holding. ETFs are bleeding, and Polygon just got a big cooperation announcement with MasterCard and Revolut. Charles Hoskinson is completely disregarding the ADA price levels while pursuing his own goals with Midnight. And to be honest, trying to keep up with everything in real time is a complete chaos. Some of you may be wondering if he just threw a lot of money at HAR. Indeed, I did. Indeed, that might be wise. It might be stupid. But here's the rationale. Yes, we were down from about $30 in July when you zoomed out on the one-day chart. We are therefore nearly 50% below those values. If the market decides to move, there is plenty of potential for a recovery. Everything is currently clouded by regulatory uncertainty, which might cause HAR to drop much further. However, this is how I think. You run the danger of missing the entry if you wait too long. I entered, and we'll see how things work out. XRP is keeping steady in the interim. Over the preceding few days, we experienced a slight decline. It's just kind of hanging in there, sitting at support levels. Nothing spectacular. Let's face it, that's hardly a monster move, even though volume is up around 42%, or nearly $7 billion throughout the market. It's enough to stabilize, but it's nowhere near the highs we've seen recently. Then, there is the community. The opium is genuine, man. People are making wild claims that XRP will reach $750 by November 22nd, which is absurd given that we haven't even reached the $250 threshold yet. You mean classic opium. While entertaining to watch, it serves as a sobering reminder to anyone who believes that quick profits are a given. Additionally, Bitcoin and Ethereum are operating independently during all of this. ETH is now trading at 386. And sure enough, I took advantage of the dip and grabbed some under 3K institutions, and retail players are currently behaving entirely differently. Retailers notice that big funds are withdrawing from Bitcoin ETFs and believe that the sky is falling. It is both a feedback loop and both frustrating and intriguing to observe. People usually underestimate how much these short-term movements affect sentiment even when the facts aren't moving that substantially. Therefore, positioning is the main focus of part 1. Depending on your time horizon, the tales of HAR, XRP, and ECH all play out differently. New tech debuts, partnerships, ETF inflows and outflows, and market sentiment are all intertwined. This is a straightforward point. Don't let the hype fool you, but also don't pass up the opportunity. If you know where to look, you can see the sets taking shape. Certain actions, like as my purchase of a HBAR, may seem dangerous, but the situation is more important than a few red candles. After discussing HAR and the overall market structure, let's turn our attention to Polygon and some significant moves that are beginning to be missed. Polygon recently signed a significant integration with Revolut, which incidentally has more than 65 million members in 38 countries. This isn't a casual collaboration. Users who choose to do so can easily transfer and receive money utilizing Polygon's rails. Adoption is greatly impacted by that, and it's one of those factors that subtly raises demand for these chains without the market immediately recognizing. Naturally, MasterCard also enters the picture. Yes. Do you recall Brad Garlinghouse showing off his Gemini MasterCard with XRP rewards back in August? Well, now MasterCard is partnering with Revolut for Polygon. This is the truth. These large payment companies are not acting in a charitable or fanatic manner. They are pursuing market share, alliances, and fees. If it makes financial sense, they collaborate with XRP one day, Polygon the next, and Solana the day after. Loyalty is not the point. Revenue is the issue. But the end impact, adoption, integration, and more real-world use for these tokens. That's the part retail frequently misses, and as the railroads are being created slowly but definitely, and they matter. Speaking about underappreciated advancements, let's now discuss Cardano and Charles Hoskinson. Midnight, his privacy-focused chain, whom he refers to as his second child, is the man's primary priority. ADA holders may not adore it because Hoskinson has stated that he prioritizes Midnight above ADA pricing pumps, despite the price suffering at about 46 cents. He said that the Midnight blockchain is preparing for its official launch, maybe on December 8th, with its Night token, and that privacy is a top priority. Although this may be annoying to ADA holders, Midnight has the potential to be a significant long-term player if it produces a functional solution that is institutionally ready and privacy-focused. Thus, several distinct stories are taking place at the same time. HAR with prospective buy-ins, Polygon connecting with worldwide payment networks, ADA and XRP is holding the line while Midnight pushes privacy solutions. It's a lot to process, but here's what you should know. Retail talk and enthusiasm alone aren't driving the market. Because these projects are genuinely being carried out, it's moving. Whether it's creating payment rails, starting new chains, or preparing products like ETFs that comply with regulations. ETFs are losing money while all of this is happening. There have been around 2 outflows from Bitcoin ETFs in particular. 6 billion, with BlackRock's IBIT being largely to blame. Section. Goldman Sachs and other hedge funds have been shorting and taking profits where they can in order to capture spreads over Fed rates. When retail notices this, they frequently panic, believing that if the major companies are leaving, then we should follow suit. Here's the problem though. It's not a death nail. This is part of the cycle. When these outflows are generating a buying opportunity rather than portending disaster, astute traders are able to identify it. The crucial query that arises as we navigate this area is, where is the opportunity in the chaos? It's about context, in my opinion. You witness media hysteria, altcoin price fluctuations, and retail fear. However, if you take a step back, you can see that the foundations are discreetly developing blockchain launches, payments connections, and institutionally ready infrastructure. Long-term price growth is driven by the increasing real utility that these tokens acquire as a result of increased adoption by businesses like Revolut and payment rails like Polygon. Let's return our attention to XRP now, as this is where the major action may begin to develop, to be honest. We observed, although there has been some stabilization in recent days, it is still far from the recent highs. Simply consider it. XRP was trading at about 250 a week ago, and it is now displaying indications of holding support and rising. However, the volume reveals a more profound tale. Although the volume is up 42% to 7 billion, which is noteworthy, it is not yet sufficient to indicate a full-fledged rise. Although the short-term bounces we're witnessing are positive, the market requires a significant catalyst to move higher. And that catalyst, guys, may be the ETF demand, for which we have been waiting. Let's dissect it. ETFs don't just suddenly raise prices. These net inflows cause a buying process that actually purchases actual XRP on exchanges when investors acquire ETF shares, particularly for a spot XRP ETF. Institutional capital shifts from the ETF to the underlying asset in this manner. There is actual demand entering the market, not simply paper gains. Additionally, the amount of liquid supply on exchanges decreases as ETF inflows rise.